Welcome to our tax and accounting channel. Today we are going to talk about offers in compromise in 2020. This is one of the most popular programs that the IRS offers to deal with back taxes, so I think that many of you will find this to be interesting and useful. My name is Gary Massey. I am a CPA and the owner of a tax and accounting firm focused on the needs of small businesses and small business owners. I help taxpayers to save taxes and to stay out of IRS trouble. So let's get into the details of the Offer and Compromise program. In order to qualify for the program, you must be in tax compliance. That means that you have filed the prior 6 years of tax returns and that you are current on all of your tax obligations. Tax obligations refers to withholding from wages, quarterly estimated tax payments, and payroll tax deposits. If you are behind on either the tax returns or the tax payments, then I suggest that you get into compliance as soon as possible in order to qualify for the Offer and Compromise program. In addition, if you are accepted into the Offer and Compromise program, you must stay compliant for 5 years. If you do not do that, your offer can be revoked, and then you have to start all over again, so nobody wants to do that. In order to qualify for the Offer and Compromise program, in addition to the tax compliance rules that I just mentioned, you have to be able to prove that you are unable to pay your tax liability in full. Not everybody can get it, but if you qualify, then you should be able to get into an offer and compromise and pay less than the full amount of your tax. And so that's what this is all about. There are two types of offers. Type number one is a lump sum offer. Under a lump sum offer, you pay 20% of your offer with your application, and the remainder is paid over 5 months after the offer is accepted. The second type of an offer, type 2, is called a deferred offer. Under that program, you pay the amount of your offer over a period of between 6 to 24 months. There is no lump sum down payment, but the monthly payments are made while the offer is pending. If for any reason your offer is not accepted, then what you have paid while the offer is pending will go toward your tax liability. Furthermore, under the deferred offer, the payments do not have to be equal, so you can make low monthly payments with a lump sum at the end. That is a good idea if you have a valuable asset like a home that you have to sell, something illiquid, and you need to sell it at the end to pay the tax. So that's what you would do. Otherwise you can go after the lump sum offer, and then you don't have to worry about the issue of selling an asset. How is the offer calculated? The calculation has two parts. Part number one is the asset part. Your assets are going to be valued at 80%, which is called the quick sale value. Then the IRS will subtract any loans that are ahead of the IRS. For example, let's say you have a house with a mortgage. If the house is worth $300,000 and your mortgage is $200,000, so what you would do is they would take the quick sale value of 80%. So you take the $300,000 value of the house times 80% is $240,000 minus the mortgage of $200,000 leaves $40,000, and that would go to the IRS as part of your offer in compromise. So that's part one, the asset part. Part two is the income part. The IRS will calculate your gross monthly income less allowable expenses. The allowable expenses are defined. There are typically national and local standards that you have to follow. In some cases, they will be your actual expenses. But basically, you have to calculate what are known as your allowable expenses, monthly expenses. And then we come up with a monthly net income. That is then multiplied either by 12 months for a lump sum offer or 24 months for a deferred offer. And that is added to your assets to come up with your offer in compromise. It's an offer that you make to the IRS to get them to compromise on the amount of the tax. Now, keep in mind that if your future income that we just calculated will pay the tax within the 10-year statute of limitations, then your offer will not be accepted. In that case, you have to do an installment agreement instead. Also, keep in mind that filing an offer in compromise stops the 10-year statute of limitations from running. This means that the IRS will have more time to audit you in the event that your offer is not accepted. So we are very careful in the offers that we prepare for our clients, and you should do the same. You should be careful. Only file for an offer if the numbers are going to make sense. If they do not make sense, you are wasting your time and money, and you would be better off doing an installment agreement or some other type of arrangement to pay off your tax. Only file an offer if it makes sense and if you're going to have a successful mathematical calculation to support the offer. Otherwise, it's just rejected and you end up hurting yourself in the end by extending the statute of limitations. I hope you have found this video to be useful. Please be sure to give it a thumbs up if you have enjoyed it or found it to be helpful in your situation. Make sure to subscribe to our YouTube channel so you don't miss out on further tax videos. And let me know what you think of the Offer and Compromise program in the comments below. If you need more personalized attention, feel free to reach out to me by clicking on the link in our website, or you can send me an email. If you would like to speak with me personally, that's great. You are welcome to call my office and ask for me, and I will be more than happy to deal with you and your tax situation. For now, I wish you all the best, and I look forward to talking with you next time.